Hello and welcome to the special edition of the FII View at Singapore with me, Tanvir Gill, and I am in conversation with two very important investors who've been tracking the Indian market for over 2 decades and been investing in India for that time period. They know India better than most sitting out here in Singapore. Joining me today are, of course, Samir, Arora, as well as Akash, Prakash. Good morning to both of you.
Morning.
Thanks very much for taking out the time. It's a great view. And I just thought that since this is a great view, is a view on India as well as great stepping into the budget?
Well, in recent days it has not been, but in the long term we have seen in the last 20 years that these things do work out in the end. Right now, of course, what happens today is quite important.
What do you think?
No, I agree with Samir. I think it's, we've been positive for some time. The last 3 months have been disappointing, to put it mildly, from a market perspective. But let's see, hopefully they get a chance to turn things around today.
What are you expecting from the budget, specifically in terms of what is said or done in terms of improving the health of the banks? You've written about it extensively, Akash. Do you think that so far things have been pretty much on course? Because the timeline, as many believe, is too short for a system as well entrenched and as deep as the current banking system is to clean up itself.
First of all, I think what the governor, the Reserve Bank and the government have done to acknowledge the problem and to force the banks to recognize is a very positive step. It's finally some government has taken the bull by the horn, so to speak, and done that. I think there are two parts to the banking problem. One is they need to be recapped. So we receive from the budget, the amount the government has outlined, the 70,000 crores, is not going to be enough, clearly. So there has to be some innovative way of getting money into the banks, whether it be through this, the economic survey talks about the RBI putting in money or SUTI stake sell down, whatever. So that's one part of it. And the second, I think they have to do more experiments like Bank of Baroda of getting in an independent chairman, independent CEO, people who have credibility, and change the governance and management framework of these banks.
Is that your opinion too?
So we have to worry also about what they will do rather than what they should do. As of today, for the budget, I think that we are looking at that they should at least put in $5 to $6 billion, 30 to 40,000 crores. And then money is fungible. They can separately talk about SUTI shares being put into this or SUTI shares going somewhere else. But broadly speaking, it is not any more time for just stories at what we will do next. They must put in some money and then accompany that with why it is not going to be the same as before, that this is money gone.
But the current quarter was fairly brutal for PSU banks. They're already undervalued, but some of the private banks also reported asset quality concerns. Now, I'll come back to that point because the timeline has been laid till March 2017. Many believe that till the credit cycle picks up, credit growth is at 11% versus 18-19% of what it was at in FY12. Till that cycle picks up, isn't recapitalizing the banks, putting in more good money behind bad?
Yeah, I think to the point, which is why I think the point of you have to change the governance and management framework for the PSU banks, right? That's why I think the Bank of Baroda example is important, because when they announced their earnings, they had a horrible earnings, big write-down. The stock was up 25% because they said, this is it. We've cleaned up, we're done, and people are allowed to look. We're looking at beyond this. So I think changing governance framework is critical, and and I think the right time to do the cleanup is now, because there is limited credit demand. The problem with the zombie bank problem, which the governor also has talked about, comes when you have high credit demand in the system. Then it's very tough to clean up, and because the banks need to lend. Right now you have limited credit demand. Use this environment to clean up the banks so that when the next cycle comes, the banks are in a position to lend.
Right.
Just one more point on this. I think that previously the government was subsidizing companies like HPCL, not subsidizing them but giving them subsidy to pass on to the public. Now the savings they have made by not subsidizing them, they need to subsidize the state-owned banks. It's much smaller amount. It is not going to be needed again and again, unlike the oil subsidy that was, in a sense, in theory, could have gone on forever. So they have to bite the bullet in that sense. It is true that you may not need that some of the problems that these banks are facing are precisely the reasons why the government is benefiting. That is, lower oil/commodity prices are also part of the reason why PSUs are doing badly, but also the reason why the government is doing well. So the government should be more flexible and not be so stingy in capitalizing these banks. It does not mean that you have backed off from reclaiming this money from the defaulters or not going after them. These are two different things. They have to give support to the banks. Right?
So step up on recoveries as well is important, and better management.
Absolutely will be. And I think that's why there is one bullish story coming out of what happens in the budget, that you capitalize the banks somewhat meaningfully, but you will have to accompany that with a story of why this will not happen again. So you will change this, you will change that, you will allow private sector, bankruptcy, things like that. Therefore, that is the positive spin that can come out of this budget.
Yeah, I mean, I think Samir's point is very valid, that this is actually, in my view, in India, anywhere in the world, tough changes only happen in crisis. So this is a crisis in the PSU banks. It's undoubted, right? Okay. I mean, clearly, because look at 11 banks have reported a loss. There's a 40,000 crore. I mean, the huge, look at the valuation, stuff like that, right? So I think the government and the RBI together are rightly, in my opinion, using this environment of a very tough position for the PSU banks to try to bring about fundamental change. I think what Samir is saying is exactly right, that they should do this stuff, right? This is the right time. You've got the environment is tough, the banks are in trouble. This is when you can bring about systemic change. Very difficult otherwise.
But does that worry you that the problem is spilling into private banks as well with the kind of asset quality numbers that they've reported?
Private banks have enough capital, Private banks either have enough capital or they have access to the markets.
So this is just cyclical for them?
Yeah, I'm not too worried about the private banks. I don't know if you do.
We are not worried about the banks we own among the private sector banks.
Which I'm reading is at HDFC Bank.
Of course, always. No, I'm saying there's enough choice, and they're not bringing down the system. Right now, if you look at why Indian market is down, nearly the worst in the world for this month, it's because of what happened to state-owned banks. It's not what happened to other stocks, which also went down 20% and 15%. So those things are all derivative of what happened to the state-owned
banks. But when an Axis Bank or a Kotak Bank, from the start of the year also fall double digits, you tend to worry about how deep-rooted is the problem.
No, that's what I'm saying. We consider that as a market response to what is happening in the state-owned banks. So,
and private banks, they have access to capital. I mean, tomorrow, just saying conceptually, even if something were to go wrong with Axis Bank, it can raise money from the market. The market will support Axis Bank. So it's not going to be a government problem or a government financial problem.
So is this a good time to buy banks? I mean, fresh, if one was to take a fresh investment call, and also on PSU banks, because, through the cycle, as these banks, continue to remain cheap, there was always this debate on, when is a good time to buy PSU banks? When will they come up as a good investment, safe investment there?
That is why I like to come on these interviews after the budget.
No, but a lot has been said outside of the budget as well, Samir.
No, I think, first of all, we normally have not been buying and will most probably not buy. But in general, that doesn't mean that the system should not look after them. There was somebody who questioned me on Twitter saying that since you own private sector banks, why are you worried about whether state-owned banks are recapitalized or not? And my answer was that we like to live in a good neighborhood. It's not just that we want the best house in a very bad neighborhood. So we need that for our market, for our economy, and then we will find other ways or maybe the same ways to invest.
When do PSUs become a good investment?
Well, I think some of the private sector corporate banks have come off a lot. I think that's a pretty interesting opportunity to be in. PSU banks really depends on how they get recapped, at what price, by who. Is it a QIP, is it a rights issue? And I'm saying again, you have to have fundamental governance and management changes. Without that, I wouldn't buy a PSU bank.
How much of the India problem is local and how much is global? Because, as I speak to a lot of fund managers, and I know you're saying that, last 2 months have been painful, but they do look at the macro growth numbers in India and say, India is growing at 7.5%. Even though, if you, look at the internals, the earnings growth has been lagging in a major way.
Yeah, I mean, I think the combination of both, right? In the sense that, as Samir says, the last... I think there are two parts. One is that India has overowned within the emerging markets construct, right? So to the extent emerging markets are getting redemptions, India obviously is getting redemptions as well, number one. But India has been the second most redemptions or outflows of any market in EM in year to date. So I think one is that. Second is there is disappointment around the fact that we've had almost no earnings growth for 4 years now. Right? Corporate have been disappointing. So that's another second problem. And third, as Samir alludes to, I think there has been a lot of rumor mongering, hopefully wrong, that this government is, that the budget may not be positive for capital markets. There may be, the capital gains he talked about and a whole bunch of other things.
That's just bad news. Do you think the markets would sell off if something gets changed?
Yeah, definitely. I think so. I think that also, people talked about other things, other taxes and stuff which indicates a move to the left by this government. So if things of that type happen, I think the investors will be disappointed.
So how much? I mean, people talking about if something like a long-term capital gains tax comes in, then people are talking about levels of like 6,300.
Easily, it could be easily.
Yeah, that's the
That's
kind
around 10% down. I think it would happen, and then people may feel that there's no capital gains left, so neither they have to pay any taxes, neither government will get anything. But before that, I am betting and acting on that bet that they will not do it, because they'll have to first announce giving up on STT, which is nearly 6,000 to 7,000 crores, nearly guaranteed every year.
That's true.
So I am not betting. Actually, I have bought more stock on Friday on this bet that they will not do it. But if they do it, it'll be bad. Absolutely, no question.
Yeah, and the sense that I'm getting as well is that they may not touch upon that.
If I may say why it's bad, also it's because the amount of money they will get is not significant, as Samir points.
That's true.
So I think it's a sense of negative signal that we are moving back to, whatever, for lack of a better word, anti-capitalist or anti, well-off and anti-market, right? Because how much will you rain doing by this?
Yeah.
People talked about estate duty coming back. How much did you get in estate duty? Less than 1,000 crores. So it's more posturing and signaling. That's I think what people worry about.
Okay, on the earnings front, a revival of pickup in earnings growth, and it hasn't quite happened as yet. And which is why the push from the government will be very important. And because of that, the fiscal deficit number is another thing that fund managers and offshore investors are looking at. Does it mean a lot if they come in with a target, if they revise the target to 3.7% from 3.5%?
In fact, I think it will be 3.7, because I also saw an interview by Mr. Dr. Raghuram Rajan saying that if you use excess beyond the fiscal deficit target of 3.5 to recapitalize banks, they will not, I don't know what he meant exactly, but that it won't be viewed as a bad deficit reason. So they can go to 3.7, although we heard on Friday across various channels rumors that they'll come at 3.5. 3.5, I think, is unnecessarily tight.
And that's also because the government said that credibility, stands to gain.
As far as the stock market guys are concerned, I think 3.7 with this linkage, that these extra 20 basis points, we have given even more to some state-owned banks, etc., we may accept. I think if you don't affect the markets directly, then you'll have to do a lot of bad things to make us feel bad. Right now, the situation is such that it'll be an all or none on what happens to the stock market. Other things being normal as expected, not adversely so. But broadly speaking, the 0-1 situation on what will dominate the conversation will be that please don't come near the stock market poor investors.
Okay, fine, fair enough. And the interesting point there is, except for the rating agencies, I haven't gathered any soundbite from any major foreign investor saying, minor twinkling on the fiscal deficit would make material difference on perception.
I totally agree. I mean, as long as you show a decline from 3.9, first of all, people realize the 3.9 of last year is actually 4.1 because the normal GDP is much lower, right?
Yeah.
So if they get to 3.9, it's actually a significant achievement for 2016. 3.0, 3.7, I totally agree with Samir. I think that's fine. You're showing some improvement. You realize.
Or if they come out and say we'll keep it at 3.9, I mean that's
if
it.
you ask me, even that I'm fine. If it's used for, like Samir says, for recapping banks, public investment, etc. Because it is obviously a very tough economic environment out there, right? And in fact, if you look at the situation in the West, every economist is dying for fiscal support from the government.
Exactly.
But the politics don't allow it there.
Yeah.
We are in a unique position that our politics allow it. It's the reverse. The politics are fighting fiscal, right? So I think 3.7 or even slightly more is fine.
A large part of the fiscal deficit story is not local. I mean, world over, governments are kind of battling with a high fiscal deficit situation, and they're looking for sources of income, right? Yeah. In this market, or rather economic state, it's really revenues coming in from taxes. Now you're saying don't touch the markets, but on the other hand, GST and the delay there, bankruptcy code, which is riding high on expectations to be implemented soon, and then of course the land bill. And these were the three key poster reforms that the government had promised to investors when they came into power. Do you think that the delay or just, no concrete plan being laid has kind of disappointed investors?
It may have, but that is now water under the bridge. Right now in the budget, we would think that if they take away some of the exemptions from corporate, they should say corporate tax rate is 29%. Because they have to cut 5% over the balance, whatever, 4 years or 3 years, whatever number of budget. So they must cut it by 1%. Anyway, we all expect, and nobody will mind, that they increase service tax to 60%. So that part is already there. And they're already keeping the oil gains. Some people said that they want to now also go after the oil downstream companies and import duty on oil. Please do it. I don't own, I don't care, do whatever. Yeah. But GST, right now, whether it happens or not, I think It's not happening right now. But we would think that the bankruptcy bill will go through in this session or the next session of Parliament.
I mean, there are various ways they can do in terms of improving buoyancy, but the critical thing is remove the exemptions, cut the corporate tax by 1%, and and the service tax increases there. And plus, we also forget, right, that you had a very tough nominal GDP. We said, right, 8.5 this year. It's definitely going up to 10-11% next year. You're not going to have negative WPI on negative WPI.
Yeah.
So there will be some increased buoyancy which they will get.
Talking about the markets, with this terrible start to the year, like you pointed out, we're pretty much at pre-Modi era when it comes to market levels. Do you think? Yeah, exactly. But do you think that this would be a good time to buy into the Indian market, because traditionally 12 times, 14 times 1 year forward is the buy range?
And also, I would like to say that although we keep saying that the government benefited a lot on account of reduction in oil, and therefore they have missed this golden opportunity, the corporate sector problem has come from the same factor. Not oil, but oil/commodity complex. So if you see the fact that 40-50% of our corporate earnings come from cyclical companies, recently because the state-owned companies which are lenders to these steel companies there, so our earnings have fallen for the same reason why the government's own fiscal and current account deficit have improved. So it's more of a cycle. That part is more of a cycle. Just a base effect will take care of many of these things. I think after this budget, if the budget is adequate, then it's more of normal cycle, and the normal cycle is not bad.
I haven't, so I was doing some analysis on the returns of the market 1 month before and 1 month after the budget. And I haven't really seen in any time in the past that when we've gone into the budget with a negative return, has the market rebounded in a major way. However, whenever we've gone into the budget with positive returns, that positivity carries on a bit more. Do you think this time could be an aberration that, you're going so light into the budget, so square off position?
I think me and Samir were talking before this. I think the expectations have very rarely been lower getting into a budget in terms of hype, expectation, perception. And I was just in Bombay, he's been there as well. People are very nervous, very scared. So I think if they frankly do nothing very scary for equity markets, I think there will be a relief rally. Just because people are just so scared right now that they will do X and do Y and hit the market and do this. So I think there will be a relief rally. Clearly, how long it lasts, we'll see. But to answer your other question also, I agree that 12, 13 times, which is pretty somewhere near, maybe slightly lower than here, is normally been a reasonably okay time and place to buy equities in India.
And I think that also on very depressed earnings.
Yeah.
So that part is okay. As I said, last year was not so bad. The year before was not bad.
My worry.
This whole thing started because of rumors about market. And then the PSU factor separately. PSU, I think, is easy to resolve because we know that everybody from the government is on board. So that would be truly disappointing if tomorrow they can't deliver an adequate package. On the stock market related, they have not signaled otherwise. That's the negative. Other things are normal. If you give 20% more to rural, that is expected. If you give more to, some, that's normal. And we don't relate to it instantly because nobody knows where it goes in the end.
True.
There are only 2 or 3 things which you directly see from a budget.
No, but my point was also, from what Akash highlighted, that expectations into this budget are low, right? Perhaps the lowest that we've seen. But doesn't this budget become the most important event in recent times, even more important than the government's last year's budget? Because this is not just about a statement of intent, but also direction of delivery for the government.
Well, I have realized that every time I give an interview, it is just before the biggest event that is going to hit the market. So this one, absolutely, I agree with you.
No, but given the government's...
No, but I agree. Why? Because, I agree with this. Why? Why it's perceived to be very important is because the next budget is before the UP election. So perception is they can't do much there. And the budget after that is just for the election. So the feeling is, look, this budget, they have no excuse. They've been around for 2 years. They can't say we're still trying to figure out what to do.
True.
There's no political constraint because the state election which are coming, they're unlikely to do very well.
So they're in a no-stress zone.
You would think they're in a no-stress zone, right? And you have this clear crisis globally, PSU, all this stuff happening. So if they deliver a very damp, insipid budget now, I think it'll be truly disappointing.
Yes.
Okay. It'll be truly
But as I said, I am betting...
Don't miss this opportunity. The time is now.
As I'm saying, I am betting that I shall do well on Monday in terms of post-budget.
One more question very quickly on the pickup in the market from here. While it might be in a buy zone, for a market to move higher, you need earnings support. And if we do not see visibility on that just as yet, Where
Don't
can the
need.
market go?
Don't need. Because in the last 2 months, our earnings have not fallen an additional 20% or 15% for the market to have fallen 15%.
No, but what is the upside to the market?
The upside is first we have to catch up for this month. We are the worst performing market in the world this month, which is down 10%. You give us back this 10%, we are okay for a few more months. Point is, this market has overly underperformed because of recent events related to India. These can be reversed in the budget. Then we will say monsoon is coming, then we'll give some more hope to a large part of our market, which is related to, say, rural and all that. That doesn't mean earnings would change, but we'll think that 2 years of drought are over. Then Mr. Akash Prakash will come say, I'm buying with a 7-year view. So there will be people with different
Are you buying
kinds.
the 7-year
I
view?
tried to buy a 7-year. I tried.
People will come with different views. First is that this event has to go through without us, in a broad sense, shooting ourselves in the foot. Then there is a relative catching up for recent underperformance, and then we will build optimism into the future. But first we need the support of all the capital market participants, including foreigners, that yes, selling will hurt. Right now they think that selling is making them smarter, which is what we don't like.
Guys, Samir couldn't be more vocal about taxing market participants, but very quickly, investment ideas in this market. I mean, I know you can't talk stocks, but generally, where is the opportunity then if the market is so oversold?
I genuinely believe some of the large private sector corporate banks, I think, are beaten down a lot. I don't think they have capital adequacy issues, and I think if you look beyond the current impairment in their corporate books, they're actually quite valuable, good franchises. I think that's a lot of opportunity there. If you're willing to live with some short-term pain, they could go down more, I don't know. But I cannot imagine over a 2-3 year horizon, these banks trading lower than where they are today.
Well, I think if you see this year, many stocks are down 20 to 25% also, mid-cap and some larger cap, mid-cap, which have no problem. At least these these private sector banks have some problems. I can tell you so many stocks where whatever problem they had from December 31, there's no new problem, but they are down 20%. So just look at the massive underperformers of this 2 months and see if otherwise it makes sense. I think there are many such stocks, but even we have not had the courage to buy them in this fall because of crossing this budget. After that, many of those stocks will be bought back, if not by new investors, the old investors who find that the fall was related to a market fear. And also there was a second fear of the globe. The global markets are now doing pretty adequately well compared to us. I mean, just to tell you, US at one point was down 10 and we were down, I think, 9. Now US is down less than 4, whereas we are in a dollar terms down maybe 15%. So there is that.
Do you think the global turmoil has kind of settled for a bit?
We don't know, but the last bit is being created by our own fears about this budget rather than anything to do with the last month's return.
No, but just taking that cue for my next question in terms of just the global environment, which is the other leg of the issue in India, impacting the markets. Do you think that's settled for a bit?
I think it's tough to say. I think it's going to be a difficult year globally as well. I think this whole move to negative interest rates, this whole Europe going to deflation, US slowing down, US maybe going to. I think it's just a very uncertain environment globally. I don't think the global backdrop is going to be a great support to India. But Samir is right. The last 1 month, India shot itself in the foot more. We're down a lot more than anybody else in the world for no obvious reason beyond fears around this. But it's not like
so. What started as a global problem actually is turned into a very local issue.
It's become accentuated. Like you could say, the first month, maybe the first 2 weeks was a global problem, right? After the global market went like this and they've gone like this, we kept going down. Right. So obviously, it became an international problem, and we've kind of accentuated it.
Okay. People wrongly conclude that because foreigners are selling, the market is falling. I think the market is falling, and that's why foreigners are selling. Please don't have so much confidence that they know what to do. They are just reacting to the market falling.
So you're a key FII, both of you. So give a message for the finance minister as he unveils the budget, as an offshore fund manager who's been looking at India for so long.
No, I have no budget. These guys are smart people. I just hope they do whatever they can within the constraints they have. Right? The reality is they have huge constraints. But I do believe that recapping the banks, bringing in some type of not hurting the markets in any serious way, spending more on public investment, cleaning up the tax code. These are low-hanging fruits that they can do. And it's not impossible, it's not politically difficult.
All right, gentlemen, thanks very much for taking out the time to speak with us. Really appreciate your views. With that, we come to the end of this special edition, tracking the FII view from Singapore for all our viewers back home on what the expectations among investors are from the upcoming budget. We'll catch you with the budget tomorrow.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.